Well, it was another rough day for Americans' wallets with a lot of red on Wall Street today.
Bitcoin down 13% today, dipping below 23,000. It's now 66% off the highs. Ethereum even worse, down 17% today, down 75% from the highs.
They don't like to surprise the market. So the last we heard, it was going to be 50 basis points. This article today tells me it's going to be 775.
You're going to give me $1 million and I'm going to give you interest on the $1 million at 3% for 30 years. And I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is raise interest rates. But they're not going to stop the inflation because the inflation is caused by excessive money printing, budget deficits, and the wars. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself.
Bitcoin has slumped further this Wednesday, with its value going below $21,000. Whoa! In just 1 week, Bitcoin value got whooshed from $31,000 to $21,000. It went down more than 30% since last week, after a higher-than-expected U.S. inflation reading. It's really stunning to see such large movements in such a short period of time. Now, the new talk of the town is how Bitcoin and other assets will respond in a higher interest rate environment. In this video today, we'll cover Michael Saylor viewpoints on Bitcoin, and if he believes that Bitcoin can drop under 15K. You know, if the Fed keeps continuing to be hawkish? Now, if you're new to my channel, be sure to subscribe and hit that bell icon. Let's dive into the video.
So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is raise interest rates. But they're not going to stop the inflation because the inflation is caused by excessive money printing, budget deficits, and the wars and political policies, domestic and foreign policies, and these policies continue. So given the fact that we have an expansive currency environment, and what you can see is the price of food and energy and scarce resources keeps going up, the question really is, if I have some money, what should I invest in?
Michael Saylor does not believe that increasing interest rates is going to stop inflation, as there are many other reasons backing up high inflation. But still, we're witnessing the hawkish Fed. Everyone is in a panic and trying to sell more and more crypto, especially this last week, after the May CPI came to be 8.6%, a lot higher than the expectation. Now, after this report, the crypto market got down and stayed at an 18-month low. I mean, Bitcoin going over 31K was devastating news, but touching and going below 21K is absolutely soul-crushing. I don't even want to talk about how much money everyone has lost in just 1 week.
The answer is you don't want to hold currency because the currency is collapsing in value. You know, the US dollar's lost 99.7% of its value over 90 years. I mean, and that's the winner. The losers are losing 99.9% of their value over 100 years. So the currencies are all collapsing. So I don't want to hold the currency. I don't want to hold bonds because bonds are currency derivatives. I'm going to basically, you're going to give me $1 million and I'm going to give you interest on the $1 million at 3% for 30 years. And I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. You don't want to hold a value stock that it's valued on cash flows. Because if a stock is valued on cash flows without growth, it looks just like a bond, right? It might be slightly better than a bond, but if the currency is losing 10% of its value a year and you can't raise your cash flows or raise your prices, you have to increase your cash flows 10% a year to offset a 10% currency collapse, right? So when the currency is collapsing at 70% a year, like Turkey, the company you own has to raise its prices in Turkish lira 70%, or sorry, you have to raise your prices by an amount such that your cash flows would increase by 70% so that you hold parity in value. So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is I want to own scarce property, scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property.
Though Michael believes in scarce desirable property because that is what will increase in value over time, but right now the market is far away from the idea of investing. I mean, we can all see that more and more selling is going on. You know, because they fear the crypto market will go even lower, so they just want to cash out as much as they can. I mean, even some major crypto exchanges like Binance had to temporarily pause their withdrawal services due to so much traffic going on. All of this is just fueling the fire of fear more and more. Now, before going ahead, don't forget to give a big thumbs up to this video.
I think that if you're a short-term macro trader, like you're thinking in terms of hours or days or even weeks, you're really concerned about that question. But I think that if you have a time frame of 4 to 10 years, I think there's a different question, which is why are the interest rates going up, and what is the macroeconomic environment? And I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated and throwing lots of money around without thinking about it. I think if you're really a deep thinker or a macroeconomic investor, the bigger issue is we have monetary inflation. The money supply or the currency supply is expanding.
Investing in cryptocurrency is a risky proposition, especially when the market is fluctuating this wildly. For this reason, Michael Saylor approaches investing in cryptocurrency with a long-term time horizon. He believes if your time horizon is 4 years or more, you may be able to weather any short-term volatility. But he also pointed out that we have some bigger issue, that is monetary inflation. The money supply or currency supply is expanding. More money chasing the same amount of goods will push prices up. And that is what is happening right now. And this is going to continue for a long time. The cost of living is going up, but paychecks are not. This is why people are struggling and trying to sell more and more, so they can use up whatever value is left of their invested money and can have cash around for the bad times ahead. The prospect of higher US inflation is definitely going to push markets to price in a greater chance that we're going to witness bigger hikes from the Federal Reserve. So, can Bitcoin drop under 15K if the Fed keeps continuing to be hawkish? Do you think recession is near? Let me know your thoughts in the comments below, and be sure to subscribe to my channel to stay updated with the market and economy. I'll see you in my next video. Adios.